This is a very interesting topic, but it's something that we always look at on a daily basis in my group. The difference is I'm lucky enough to control most of my value chain. So, for example, we do many things. And if we take the agricultural value chain of my company, for example, we produce seeds, we do fertilizer, and we do the agrochemicals. Then we go to the communities and we create our own cooperatives. So we now capture the farmers and lend to them the inputs. We now provide them with vocational training and services to teach them, extension services to teach them the best techniques, not technology, techniques. Because when you start to put technology into rural economies, you are creating unemployment. The more tractors you put down, the less people that will work. Because you need one tractor driver, but you probably need 18 people to work that hectare. So we try and use techniques to capture people on site, and they work. Once they harvest, our factories now come with a guaranteed offtake agreement. So my input supply business has sold to the farmers, has lent to the farmers. When my factory comes, it pays the farmers, and the farmers pays back the input company. The factory now goes and processes these items. Now, obviously, we have some items that come into the value chain that we don't control. Maybe the bagging facilities, etc. Sorry, the sacks or the casings that we put our products in. Once the factory finishes processing, then our distribution company now buys from the factory. And they are now responsible to get the product to the consumers in the urban centers. So we have a rural-based business. We have a semi-urban-based business in the processing side, and then we have an urban-focused business in the distribution and marketing side. Now, what we did recently as well, taking into account we cannot carry this burden alone, is we also went ahead and bought a bank. And so our bank now has started to work with our our agri-input business, getting some of our agro dealers to become agent bankers. So those people in the rural economy who in the past had no access to banking facilities, because we all talk about tech and efficiencies of tech. But if I'm sitting 200 kilometers away from the biggest city I know, and there's no bank, you can't tell me to go on an app that my money is there. Because all the markets I operate in are cash and carry type system. So we've now started to engage our agents and ensure that they've now become a semi-bank branch in those communities, so that people can deposit and withdraw. You now get them to start to borrow from those agents. And luckily enough for us, so far, touch wood, we've done a close to 99.6% recovery, which means the default rates are very low. Now back to your question about passing costs. It's inevitable to pass costs. But what cost are you passing? Because we still have not defined costs. Cost is about if you want to have an inclusive system, you have to be inefficient in Africa. Efficiency is something that we discuss in urban centers, but in rural areas, to be inclusive, to create a rural economy where people are employed, where people earn in an unskilled, uneducated environment, you have to be inefficient. That inefficiency pays back in security. Your assets are protected. Your wealth is protected because people are active. And if you have security, you are saving costs. The next thing is you now look at those things that you don't control. Packaging, for example, quality of product. You are not compromising on quality in terms of people will get unhealthy, but you are compromising on affordability. Is this packaging necessary? We have a marketing team that is constantly looking at our packaging. What ink should I use? What colors should I use? What type of raw material should I use to even make the bag? How do I reduce that cost? Where do I advertise? If I'm selling to the urban consumer, do I go digital? Do I do print? Do I go TV? Do I go radio? Because a lot of these costs actually happen at the back end when you come to get that product to the consumer. But if you have a story about that product, that this product has created thousands of jobs, the consumer will naturally get attracted to it. And we also ensure that we have partners as well. So we work very closely with all the development agencies, in my country at least. Some of them give us grants, some of them give us training, some of them give us both. And we try to ensure that we lower our cost of production, but we also lower our cost of distribution while controlling the financing aspect of it. It's inevitable, but it's controllable. Digitization technology is fantastic in urban areas, fantastic in organized retail. But in rural areas like where we operate, where we have our factories, and it's not only in Nigeria, we have factories in Benin Republic, etc., it's very difficult. Let me give you an example. 6 months ago, we decided to do a financial inclusion drive for our farmers, to open bank accounts for them. But the first thing we did was we partnered with the National Identity Management Agency to give our farmers birth certificates. So imagine giving a 67-year-old a birth certificate for the first time. So we had a setup in the village head's palace. The guys came in and queued up. It's all in the media. What's your name? How old do you think you are? You know, what's your address? There. You know. And then we started from there. And then there's a witness that confirms this guy is roughly here. So it's like 1st July 1952, 2nd August 1953 kind of thing. And then you now move to the next layer where there's a witness, a local government official, and a certificate is stamped by the local government. Then you now pass it to the Identity Management Agency, who now have a government document that confirms that this guy is approximately this age and roughly lives there. Then he now has a national ID card. And imagine the look on their faces when they get that paper. It's printed there in front of them. They now get that document and then they move to the next desk, which is our bank. And then congratulations, you have a bank account. And it's amazing the kind of monies they were depositing. We had someone who literally deposited $7,000 in the middle of nowhere, the equivalent of $7,000, into a bank account. And we were all shocked. But they are farmers. So the assumption is because they dress rough, they don't speak English, they don't have documentation that they are poor. And we can't just assume like that, because they are also proud people, they have their own economy. Right? So the fact is, if I now come and meet this guy and I say, you know what, download this app, get this thing from Amazon, it will be delivered to your door, there's a microwave, you can do this. Then we've now gone to the moon. I mean, this is like, you know. So we kept it simple there, and we kept it, that's their own digitization, that's their own technology. Maybe their kids will now have a better life because their parents are formal. And already we've started, we're creating rice academies, we're creating sesame academies, because even if you're doing it manually, maybe your technique is archaic. Maybe you don't have to space it 2 meters, maybe you can just do half a meter. But then you have higher yields. Then your son will now come and say, you know what, I want to use a tractor. And then his son will be working in a factory. So now you have this guy who has 5 hectares as opposed to half a hectare, and then you now continuously start to evolve. Like you said, it's an evolutionary process. You cannot leapfrog reality. There's an urban Africa, there's a rural Africa, and we're hovering in between, but we have to customize the needs of the urban man, tailored for the urban man, the needs of the rural consumer, tailored to the rural consumer. It is our job to make sure that bridge exists. We cannot take what was done in the US, we cannot take what was done in Singapore and try to bring it to Nigeria. Lagos is Nigeria, Kebbi is Nigeria, but they are 2 separate Nigerias. They have nothing to do with each other. Kebbi supplies rice to Lagos, Lagos eats the rice. That's the connection. We have Africa leaders and policymakers. We have African businesses. The policymakers put policies, the businesses take the brunt of the business, take the brunt of the policies. But nobody engages the Africans. Policymakers and government and institutions. The businesses that take these policies are institutions. But if you go to any African today, your average African, and talk to him about, oh, we have a free trade agreement, he will be shocked because he already trades freely, cross-border, using Newton's law of smuggling. So, because it's gravity, things just move. So when you now go to those border communities and you start to say, oh, now I'm bringing a policy to formalize what you've been doing for hundreds of years, he will laugh at you because nobody has engaged him. Go to Seme. Back then, we used to drive from Nigeria to Cotonou, right? And we go with our passports and our documents, our yellow fever cards, etc. And we're standing in the queue trying to cross the border with immigration and 17 other regulators that are looking at different pages. And then next to me is a guy on a bike with a goat. No documents, free trade. My documents, an hour. Right? So, because these guys are already doing it. So when you talk about it, for businesses to thrive, if you don't engage those Africans who do free trade, continental free trade, who find a way of getting the Naira and Sefa to work, when our 32 central banks are struggling to do it, and nobody talks to them, then we become a joke. It's free trade. Policy is meant to make it fair. And we also have completely ignored the principle of business, which is there's a thin line between competition and collaboration. They all collaborated to sign a document, but nobody has factored competition. And every single country leader that was present at this conference and all the other conferences we go to is talking about, come to my country. My country is special. And by him telling me to come to his country, he's saying, ignore that other country. I was at an event yesterday, some people, and they said, oh, come to our country. And I said, no, I'm not coming. Right. And I was also talking to another person from another African country who says, why don't Nigerians care about my country? And I said, because we don't. And that's just the truth. You have to think about it. Competition means come to me, don't go to him. Collaboration means let's work together for the betterment of our collective people. How do I make that work? It is nowhere in any document. And that's why we need to start to think about. Get the Africans involved in African policy. Thank you. I think we have to study how, we have to officially, formally study how Africans move and interact with each other, as opposed to the theoretical expectations of how they should move and interact with each other. I mean, just Google a town called Ilara, I-L-A-R-A. It's on the border. It's a town literally between Nigeria and Benin. And there's a house whose living room is in Nigeria and toilet is in Benin Republic. And that is what happens as you move across borders. It's very difficult for you to say Gambia and Senegal, or Lesotho. So it has to be, let us study how our people move. How do they interact and engage each other first? And I think by doing that, we can now come back and formalize it, as opposed to creating a formal structure where many people, like I said, don't even have identification. So my own thinking is we should learn from ourselves. We should learn from what makes us different, and we should learn from what brings us together. The successes that happen the successes that happen between border communities is trade-driven. The conflicts that happen within borders is tribal. You rarely hear cross-border conflicts that are linked to trade. Most of them are linked to tribal issues across the borders. This tribe is on this side, that tribe is on this side. They sell yams to each other. Some guy cheated, but they find a way of closing the trade. But that historical tribal conflict is what creates beef amongst ourselves, and that impacts trade. So my thinking is, as we do in our own group, we're constantly reviewing and understanding the psychology of the consumers, the psychology of our stakeholders, whether they're input suppliers and all those things, and then working to see how we can slightly move them closer to formalization. It will not happen overnight.